Welcome to Alternative Investments Chat,
where we demystify the world of alternative investments and financing for entrepreneurs and investors alike.
With these discussions, we hope you're more empowered to unlock opportunities in your business or portfolio. I'm Erin.
And I'm Erica. Let's get started.
Hello, and welcome back to another episode of Alternative Investments Chat. So recently, we've been talking a lot about stocks. And while stocks are not necessarily alternative assets, they definitely play a very, very large role in our portfolios. So they also influence investors' behavior as a whole. When the stock market isn't doing well, investors don't feel great and vice versa.
Right.
So we still feel it's very, very important to talk about these traditional assets from time to time. So here's something that you may not know. The stock market has seasons. Did you know that?
Okay, like winter, spring, summer, fall?
Sure. It's a natural autumn color. No, I'm just kidding. Exactly. So not those four seasons. We're actually talking about earning season, which rolls around 3 times a year.
Gotcha.
So one less than a regular seasons, right?
Yeah. Confusing.
I know. It's fine. Everything is. It's the English language and English in the United States. We don't do anything properly over here. So basically, a large percentage of publicly traded companies release their quarterly results about 2 weeks after the end of the quarter. So we're looking at the middle months of January, April, and October. Meaning at the time of this recording, earnings season is just about 2 weeks away. So mark that on your calendar. So this actually marks the start of earnings season, and it tends to last for about 6 weeks.
Yes.
When earnings season starts, it can feel like the whole investing world shrinks down to a few weeks. I always feel like that too. But conversations stem around who beat expectations, who missed them. I hate when the stocks I picked don't hit their mark. But also which stocks are popping and plummeting after hours. I hate that you can do after hours. I kind of liked the Wall Street hours before when you couldn't do things on your mobile device. But
yeah. Well, okay. So I'm seeing what you're saying, though.
Yeah.
It's kind of like a financial report card, I guess.
Ding.
And just like a bad report card from a teacher could cause a world of hurt at home with your parents.
We don't want to talk about that.
A bad earnings season can wreak havoc in the investment world. Not all companies report during earnings seasons, but a lot do. And that gives us a lot of data to digest. Not just us, but the experts as well. And those numbers get passed along to the experts and the analysts who put together their estimates and projections. So a small surprise can create a really big move, especially when everyone is watching all at the same time. And you might be asking yourself, what constitutes a good earnings season anyway? What sort of things are we even looking for?
I think that's a fabulous question. I ask myself that often when I started this weird, wacky journey down investments.
What am I doing here?
What am I doing
Why
here?
am I here?
Exactly. So there's a few things everyone from analysts to those retail investors are looking to indicate whether our report card, as you like to call it, is good or not so good. So first one being earnings versus expectation. Analysts never go into earnings season blindly.
Right.
They already have some expectations built up about how they expect earnings to look. Again, kind of see how the company's going, what's going on around the world to see what's going there. So if these results align with those expectations or maybe even surpass them, hopefully, this is usually a really good thing and it can even signal growth.
Yeah.
And the opposite, well, you're smart.
Yeah.
You get it. If it goes the other direction. So next thing we can take a hint from is company guidance. So company guidance is when companies share their expectations for upcoming earnings, revenue, and spending. Back in the day, this was called the whisper number. ASMR. Whisper number. Whisper number. Because it was normally kept very, very hush-hush with only a few people being in the know. Now, legally, companies are required to share all the same information with their investors at the same time.
Right.
This guidance can influence investors to buy, sell, or hold, and therefore have an impact on the stock prices as well.
Exactly. And we can't forget that investing is emotional. Anything that could be interpreted as a bad sign could leave investors running for the hills. They're like, get me out of here. I don't want anything to do with this. And now, not every single person is a fan of companies issuing guidance. In fact, billionaire investor Warren Buffett is somewhat of like a guidance hater.
Okay, then I'm on his side. He's my BFF for life. So
so he said in a 2018 interview with CNBC, this is a quote, "I like to get those quarterly reports. I do not like guidance. I think guidance leads to a lot of bad things, and I've seen a lot of bad things." It's a little cryptic.
It is. Sir,
but
Mr. Buffett.
Basically his worry is that it can lead companies to be too number focused in the now instead of prioritizing long-term growth. So making decisions that center around these quarterly reports instead of thinking about the longevity of the company.
Got it.
Another thing that we can look at is the performance of big players like Amazon and Apple. These giants and others like them are what can be considered bellwether companies. Meaning that some see their performance as an indicator for overall health of the stock market and the general economy, which seems like a lot to put on like a few companies.
Yeah.
But I think if the indicator is like, if they're doing really well and they're making moves and they're growing, then typically that might signal that things are going okay or going good. The indicator isn't perfect, obviously. And in fact, most of these, none of them are. Like no indicator is perfect. You don't have a crystal ball that's going to tell us exactly what's going on. But the general idea, again, is that if these companies are struggling, there's a good chance most others are probably doing well and can point. And if they're not doing well, then that could point to an economic downturn that's on the horizon.
Yeah. So I wonder what it means when one's doing well and one's not.
Great question.
Well, again,
don't confuse the listeners, Erica.
I know.
We'll get into that later at a different episode.
All right. Well, let's talk about why earnings season feels so intense.
Yeah.
Because information is so concentrated with thousands of companies reporting in a matter of days. Attention and trading all pile up together. Lots of emotion involved here. I know I'm like that. So I'm very emotional. And if you throw everything at me all at once, I'm going to shut down and I'm not even going to pay attention, right? So expectations are everything. This means a company can actually grow its earning and still see its stock fall if it disappoints versus forecast or lowers its outlook. Because it's being graded against those expectations. You didn't meet them, sir. Sorry, goodbye. No.
Pass, fail.
Exactly. Swipe. The reaction to the quarterly report is instant because stock trades continuously. One result hits, you get rapid repricing.
Yeah.
Sometimes this means the market overshoots in both directions and investors and that wonderful algorithm respond.
Yeah.
So while the trading frenzy can be useful for short-term trades, long-term investors often find this time period to be very, very stressful and at least distracting, or at least distracting. So this is especially true if you're, again, like myself, I'm checking my portfolio often. I want to say every few hours. I've gotten it down. I've gotten better.
Okay.
But especially after seeing the quarterlies, I definitely do
You're checking in.
See where I'm falling.
Yeah, you got to stay on your grind.
Yeah.
Work hard, play hard. So to our listeners, how does this affect alternatives like private credit, like private equity and credit? Like, what does this have to do with this? Alternatives aren't playing the same game, but what game are they even playing?
Backgammon?
Great question. Alts are valued differently, right? And typically over a much longer window, and their schedules are not exactly correlated with whether it's January, April, July, October. Like
they don't care.
They don't care.
No.
Now contrast that with the private alternatives, right? Or we're going into private alternatives here. Private equity, private credit, private real estate, and infrastructure. For example, strategies that don't trade on public exchanges. This is the stuff we talk about here. This is our bread and butter.
Yep.
Unlike publicly traded companies, private companies are not required to publish quarterly earnings.
No, and it drives me nuts as an investor.
And additionally, you don't have the luxury of like checking in stock prices at any time to see how a company is doing. So because of that, you don't see moves that are tied to every single possible headline. Price updates do happen periodically, of course, but they aren't tied to like earnings season in the same way that publicly traded stocks are.
Exactly. So even when you line up valuation dates with public markets, private asset valuations still tend to be less volatile and hold up better in bear markets or big public sell-offs. So for better or for worse, you don't have a complete transparent view into your private investment all the time.
Yeah.
And I know that, and it drives me nuts. Like I just said, I would love to see what some of the investments that I have,
How they're doing.
Unfortunately, I just have to sit here and just be mad about it. But of course, there's risk with alternatives, but those risks are expressed differently. Business performance, there we go, leverage and exit values over years rather through daily price swings around quarterlies. I will say that, again, because I can't check that, they're not correlated to the market. I'm not that worried, but I would like to just kind of see.
Yeah, of course.
So
You're curious.
Exactly. A big driver of the difference of earnings season is, you guessed it, that liquidity. So with stocks, if earnings disappoint or headlines scare you, you can sell and move.
Yeah.
Headlines have been scaring me a lot lately around a lot of my stocks. But I'm trying to be strong.
Yeah.
And not. So let's take a look at an actual example of this. So in April 2022, Netflix published their Q1 earnings. The report showed a decrease in subscribers for the first time in 10 years, and that accompanied guidance indicated their prediction that the trend would continue into the next quarter. So they're going to keep going down. What did investors do? Panicked, right?
Yeah, classic. That's what investors do.
And they raced to sell their shares, and the stock dropped 35% in one whole day. That is a lot. And it continued to decline over the next few months. So why were investors so nervous? Why were they screaming and running for the hills? Basically, the news from Netflix was seen as a red flag that streaming services themselves were in trouble, like the whole genre, right? This caused investors to also look at other stocks like Roku, Disney, HBO, all the other, and there's like 5,000
bajillion different streaming services now.
So it's causing a
Crackle,
Tubi,
Tino.
Tubi, yeah.
They're all. I'm literally. There's like, I swear to God, made up names now for. They're like Bebo.
I think we're in the wrong business.
Yeah.
Should we create a streaming system?
Crazy.
Well, again, this made, because of the Netflix earning, everyone was looking at all these and they were getting rid of some of them.
Mm-hmm.
So in reality, there were a lot of factors at play for the decrease in subscription or in the subscribers to Netflix. It wasn't the overall holding. There was an increased competition, the $5 billion, from other subscription-based platforms. Also, the world was actually starting to return back to normal after the pandemic, meaning that people were spending less time at home, binge watching amazing television programs or rewatching old favorites. Mine is New Girl. If you're ever wondering, I've literally watched from start to finish 5 times. I'll probably start next year with another one. My boyfriend puts me on a limit. I'm only allowed to watch it once a year. So anyway, we had to go back to work. So we couldn't just sit at our house and binge watch. So unfortunately, we do have this situation to thank for we also have the restrictions from Netflix to thank for this as well.
Yeah.
Okay. They need to just mind their business. So I couldn't share my Netflix password with anybody anymore. They got you.
Yeah, they got us. Exactly. Because they rolled out those restrictions after this whole debacle.
Yeah.
Because they were realizing, part of the reason why we're missing out on subscription is because everyone's sharing it.
Yep.
So then they said, okay, you can't share with someone outside your home. And they enabled like that location service. And it made me so mad. I'm like, why can't you just let me be on my Netflix, on my parents' Netflix in peace?
Yes.
I don't have money. Leave me alone.
I'm a poor adult and I want to live off my parents for as long as I possibly can, especially when it comes to
of course,
streaming services.
So I think I'm starting to see why Warren Buffett is anti-company guidance situations like this.
Way to go, Netflix. You messed it up for everybody.
Exactly. One little report caused major chaos. And honestly, this situation just kind of reminds me of how silly humans are. I don't know if you've seen the TikTok trend or like prank of where someone will just start like screaming and like running in circles, swatting at like some invisible, dangerous force that's coming, and the other person just starts joining in.
Yes.
Like there's what's happening? What is it? And they'll just start like running around, and they don't know. Like this is kind of like that. It's like the report comes out and some people sell. Then the selling itself makes people more scared.
Yep.
And then that fear makes people sell more. So then all of a sudden, you have all of this just piling up on top of each other and probably making things even worse than they would have been if people just would have been like, okay, like let's take a deep breath.
Yeah.
Let's hold tight. Let's, not run away from invisible, dangerous force. And people can make their own choices, but I just feel like this is a really good, like, there's something
Analogy of it,
innate
yeah.
about humans that is like, if we see other people perceiving danger, even if we can't interpret that danger, we will act the same
Exactly.
way because of that fear, even if we don't even understand or see what that thing is that other people are running from.
I know. I think I want to pretend that I wouldn't do that, but I'm pretty sure that I 100% would just start freaking out if someone else was freaking out about
I'm
stuff.
sure. Yeah.
Anyway,
I
that's
almost did it to you. I almost took that part of the script out and was just like, should I just try it and see what'll happen?
I probably would have been like,
yeah, but
what's your problem?
I thought that was maybe a little much.
Well,
for this Wednesday
it
here.
would have been much for the listeners who aren't watching us on
just
YouTube to
hearing
try
screaming.
to figure out what's
Yeah.
going on. But that's okay. That's a perfect segue into the adventures of alternatives, okay? So where we sit, many private funds have multi-year lockups, limited or scheduled redemptions, and capital that's called and returned over that life cycle, not just on pure demand. So while illiquidity is a constraint, we know this, it can also be a guardrail. So it forces you to actually use your little brain and think in years instead of quarters, because bailing out overnight during a bad news cycle is harder and sometimes even impossible.
Right.
Contracts and secondaries prevent those types of snap decisions.
Yeah.
So when private market managers weigh in on the long-term lockup in capital, it lets them focus on how their business is run and how to create value rather than focusing solely on that month's markets segment, right?
Yeah.
It's a great sign for your portfolio stability.
Yeah,
So
exactly. So for your public holdings, which might be experiencing some whiplash, based on quarterly reports, your private positions are mostly showing up as gradual changes and hopefully steady distributions over time. That's
we like those
what you would want.
distributions. Yeah.
During earnings season, public investors are hit with analyst notes, target changes, TV segments, social feeds, and even meme stocks. There's just so much garbage. Not that all of it is, but when it's that much, it can feel just like someone's piling a bunch of garbage on top of you.
Yeah.
And any one of those channels can nudge even the most disciplined investors in any which direction. Commentary or FOMO can throw off your plans and test your resolve. Though earnings season might seem just like a public markets thing, its effects definitely ripple into the world of alternatives. We look to public markets to set the benchmark. If earnings season reports are pointing to signs that an economic shutdown might be on the horizon, investors might hold their money in general, meaning less money that's going into the stock market and less money that's going into alternatives.
Yeah.
Also, public companies give insight into how a sector is doing as a whole. So with our Netflix example, right? Its report had investors questioning the streaming industry as a whole, not just Netflix, but the streaming industry. And insights like these can affect whether investors are putting their money into said segment, holding on to it, or where they're putting their money in general, whether that's public or private.
Exactly. And also with companies who may be looking to go public in the near future, a poor earnings season might make them actually sit there and hold tight for a little bit longer. They're like, maybe now's not the time.
Yeah.
So if you are invested in that said company, that means that your money is going to be tied up for a longer period of time. Same with like that one that I have. I'm like, come on, they keep saying they reserved the NASDAQ ticker and it's any minute. And I'm like,
come on, people.
Come on. So before jumping on that bandwagon during earnings season, good. Lots of words today. Take a deep breath. That's what I need to do. And really evaluate your options. It's best to look at overall trends instead of basing all of your investment decisions on one little itty bitty report. Stocks have a tendency of reacting quickly, and after an earnings are reported, it doesn't just mean that they'll stay there.
Yeah.
Okay.
They might take a dip and they might recover.
Exactly. Again, back to the Netflix stock, largely recovered since that low in 2022. They're back up there. Streaming is still going well.
They're doing good.
Yeah. It's a good idea to have a plan heading into earnings season to help you avoid your emotions from taking control. I get it. I'm very, very guilty of doing that myself. And And so I've tried to be more disciplined and learn how to do that. So think about what you want to see and what you would make if you buy, sell, or hold.
Yeah, exactly. And I actually gave similar advice to a friend recently. She has been working at a company for a while, but she just got a great offer from a different company. And she let her current company know that she would be accepting this offer. And they said they wanted to compete. Well, now she's feeling stressed because she actually really likes what she was doing at her other job. And obviously, too, like changing jobs is really stressful in general.
Yeah.
And you already know, she's like, I already know that I love my coworkers. I know I love my boss. Like, okay. So I told her, you need to come up with a number in your head before this meeting that you have tomorrow to discuss salary and stuff. Have that number in your head. And if it meets or exceeds that number, you'll stay. But don't go in not knowing and without a plan, because that's when your emotions could be swayed in a certain way. You're vulnerable and, you're open to suggestion at that point. So if you do that, you can stay perhaps more rational and calm, and you can apply that principle to investing as well.
Yeah. Devise a plan. We like that.
Yeah. Always have a plan.
Yeah.
So hopefully our lovely listeners already have some public stocks and alternatives in their portfolio. Public markets give you liquidity, that flexibility to pursue some short-term returns that can actually fuel your alternative strategy, which can operate more in the long-term, longer time horizons. Having both means you have multiple buckets and ideally a growing portfolio, even when earnings season throws other people for a big loop.
Yeah. So instead of panicking, keep in mind questions like, do these earnings move really change my long-term vision on this stock? Are my private investments still on plan based on their reports and cash flow? When you do that, actually earnings season becomes a chance to check in and rebalance where necessary. And while your alternatives can help anchor that long game, right? So earnings season will always be noisy, that garbage on garbage on garbage, but it doesn't have to run your strategy.
Yeah, exactly. And if this episode helped you see how public and private investments can work together, share it with someone who gets earnings season anxiety. Hopefully this will help quell their fears a little bit. And be sure to like, follow, and subscribe so you don't miss out on future episodes. Thank you so much for tuning in. We'll see you next time.
Thanks for joining us. Stay tuned for more insight on our next episode.
And don't forget to subscribe to continue the alternative investments chat. See you next time.
Content provided in this podcast is for informational purposes only and should not be construed as professional, financial, or investment advice. This podcast should not be construed as an offer to sell or a solicitation of any offer to buy any securities. We strongly recommend that you seek advice from a qualified professional before making any financial decisions.